So reports are indicating that perhaps government has approved Paytm's investment in its payments arm, which is Paytm Payment Services Limited. That could be perhaps that light at the end of the tunnel that they have highlighted in their note, because of course the stock has been marred by a lot of controversy, the latest being some layoff news coming in. But if this does happen, this would be a positive coming in for the company, because this would be a key step in PPSL's payment aggregator license journey, because remember that license has been pending for a long time, and that license would actually allow the company to onboard fresh customers, which they have been barred from doing right now. So that would mean an incremental positive, and that of course would pave the road to normalcy as far as Paytm is concerned. Now Bernstein says that while the business benefit of receiving the payment aggregator license would be limited, a payment aggregator license, if awarded, could be a significant positive development, as it would mark the first positive action from the regulator after a series of restrictions that have been imposed on Paytm's business. So just watching out for that. A couple of agencies have also reported the same. The stock has been doing quite okay off late. Of course, yesterday it was a bit under pressure, but otherwise it has managed to bounce back a bit. But let's see where it goes from here on. Nikunj, any thoughts on Paytm?
See, for me, it's still a toss of coin, right? I mean, the reason why it's toss of coin is because you can see that the brand has got impacted, but you can see that, they are now doing whatever it takes. They're moving, every unturned stone in a sense to ensure that they come really on the right side of the regulator. So from a euphoric listing to a bombed out fall to a reasonable amount of, semblance coming to the stock, I think Paytm in last 2 years or last 3 years has pretty much gone through excitement, euphoria, panic sell-off, and now adjustment to the news. So there is going to be change in business mix, and if there is going to be change in business mix, that will alter FY25, FY26, FY27 estimates. And because of these regulatory issues, those projected earnings are not going to come back. So assuming that if Paytm was also able to nullify and come on the right side of and they're able to take care of all the regulatory challenges, still the stock will struggle to rediscover its earnings momentum. So in that context, I guess Paytm is something which still remains the risk of underperforming. But now, more than absolute earnings, it really is going to be news. It's really going to be update from the regulator, and what they're able to do with some of the non-core assets in a sense will actually drive the stock. My point is that the stock is not that cheap that you can say that there is value in the stock. Considering the earnings, what can we predict? See, we can't predict what will happen to the earnings. What we can say is that what is the market cap based on the current regulatory hurdle, what is the estimated earnings for FY25 and FY26. That is only what we can predict. Now, what happens with the regulator, what happens with the government, we don't know. So that I'm keeping away. But based on what we know, which is earnings and projections, I think the stock is not very cheap or is available at throwaway price. It was available at a throwaway price when it cracked below 400, but that is not the case now.